It was the best time. It was the best of times. It was the worst of times. There is a saying that goes, it is not what happens in one life that matters, but it is the means one puts on what happens that matters. The potential from 1986 to 1996 was for some people the worst time of their lives. For others, it was the best of times. When I received that phone call from my rich dad in 1986, I recognized the fantastic opportunity that this economic change presented me. Even though I did not have a lot of extra cash at the time, I was able to create asset by utilizing my skills as a B and I. Later in this chapter, I will describe in great detail how I created asset that helped me become financial free. One of the key to a successful and happy life is to flexible enough to respond appropriately to whether change comes your way, to be able to respond and make a good things out of anything. Unfortunately, most people have not been equipped to handle the fast breaking economic changes that have happened and continue to happen. There is one thing that is blessings with human being. They are generally optimistic and have the ability to forget. After about 10 to 12 years, they forget, and then things change again. History repeats itself. Today, people have more or less forgetting about the Tax Return Act of 1986. The E's and L's are working harder than ever. Why? Because their tax loopholes were taken away, as they have worked harder to get back what they lost. The economy has improved, their income have gone up, and their tax account has again started whispering the same old words of wisdom. Go buy a bigger house. Interest on your debt is your best tax deduction, and beside your home is an asset, and it should be your largest investment. So they look at the easy monthly payment and they get sucked into higher debt position. The housing market is booming. People have more disposable income and interest rates are low. People are buying bigger houses. Their moods is euphoric and they are pouring money into the stock market because they want to get rich quickly, and they have realized they need to invest for retirement. Again, in my opinions, our great transfer of wealth is about to happen. It may not happen this year, but it will happen. It will just not happen in exactly the same way. Something different will happen. This is why my rich dad had me read books on economic history, economic change, but history repeats. It just does not read on the same set of circumstances. Money continue to flow from the left side to the right side of the quadrant. It always has. Many people are deeply in debt, yet they pour money into the biggest stock market booms in the history of the world. The people on the right side of the quadrant will sell at the top of the market just when the market cautious people on the left side overcome their fear and enter the market. Something newsworthy will happen. The market will crush, and when the dust settles, the investor will move back in. They will buy back and what they just sold again. We will have another great transfer of wealth from the left side to the right side of the quadrant. It will take at least another 12 years for the emotional scares to heal of those who lose money, but the wounds will heal just as another market is nearing its peak. At about that time, people will begin quoting Yogi Berra, the great New York Yankees baseball player. It's deja vu all over again. Is it a conspiracy? often I hear people, especially people on the left side of the quadrant, say that there is some kind of global conspiracy held together by a few ultra rich families that control the bank. These banking conspiracy theories have been around for years. Is there a conspiracy? I do not know. Could there be a conspiracy? Anything is possible. I know there are powerful families who control massive sums of money, but does one group control the world? I don't think so. I see it differently. I see it more or less as one group of people or on one side of the quadrant with one mindset, another group of people on the other side of the quadrant with a different mindset. They are all playing this one big game of money, but each quadrant is playing from a different point of view and with a different set of rules. The big problem is the people on the left side are unable to see what the people on the right side are doing, but the people on the right side know what the people on the left side are doing. Witch hunts. Many people of the left side of the quadrant, instead of finding out what the people on the right side knows, that they do not go on witch hunt. Only a few centuries ago, when there was a panic or something bad happened to a community, townspeople would go to a witch hunt. They needed someone to blame for their plight until science invented the microscope and people could see that their naked eyes could not, which were germs. People blame other people for their diseases. They burned witches at the stake to solve their problem. Little did they know that most of the diseases were caused by people living in cities with poor garbage and sewage disposal. People had caused their own problem by using unsanitary condition, not the witches. Well, witch hunts still go on today. Many people look for someone to blame for their financial plight. These people often want to blame the rich for their personal financial problem rather than realize it is often their own lack of information about money that is the fundamental reason for their plight. Heroes becomes villains. Every few years, a new financial guru appears and seems to have the new magic formula for wealth. In the late 1970s, it was the Hunt brother who tried to corner the silver market. The world applauded their genius almost almost overnight. It was the Hunt brothers who tried to corner the silver market. The world applauded their genius almost overnight. They were hunted down as criminals because so many people lost money after they followed the brother advice. In the late 1980s, it was the Michael Milken, the junk bond king. One day he was a financial genius. The right after the crash, he was tracked down and sent to jail. The individual changed, but history repeat. Today we have new investment geniuses. They come across on television. Their names are in the paper. They are the new celebrities. One of them is Alan Greenspan, the chairman of the Federal Reserve Board. Today he is a nearly a god. People think he is responsible for wonderful economy. Warren Buffett is also touted as a near god. When he buys something, everybody rushes in and buy what he buys. And when Warren Buffett sales price crash, Bill Gates is also watched carefully. Money will follow him freely. If there is a major market correction in the near future, will today financial heroes be tomorrow hated? Only time will tell. In every up cycle of the economy, there are heroes, and in every In every down cycle, there are villains. In reviewing history, there have often been the same people. People will always need witches to burn on conspiracies to blame for their own financial blindness. History will repeat itself, and again, a great transfer of wealth will take place. And when it does, which side of the transfer will you be on, the left side or the right side? In my opinions, people simply fail to realize that they are in the large global game, a virtual casino in the sky, but no one told them that they were an important player in the game. The game is who is indebted to whom. Being the bank, not the banker. In my mid 20s, it dawned on me that the name of the game was to be the bank, but that didn't mean to get a job as a banker. My advanced education was about to begin. It was during this period that my rich dad had me look up words like mortgage, real estate, and finance. I was beginning to train my mind to see what my eyes could not. Encouraged me to learn and understand the game, and then after I learned the game, I could do what I wanted with what I found. I decided to share my knowledge with anyone who was interested. He also had me read books on the great leaders of capitalism, people such as John D. Rockefeller, J.P. Morgan, Henry Ford. One of the most important books I read was The Worldly Philosophers by Robert Halbronner. For people who want to operate on the B and the I side, his book is must read, for it traces the greatest economics of all times, starting with the Adam Smith who wrote The Wealth of Nation. It is fascinating to look into the minds of some of our most important philosophers, the economists. These pupils interpreted the evolution of modern capitalism over brief history. In my opinion, if you want to be a leader on the right side of the quadrant, historical view of economic history is important to understand both our history and future. After the worldly philosophers, I recommend reading Paul Zan Pilzer, Unlimited Wealth, James Dell Davidson, The Sovereign Individual, Robert Preacher, The Crest of the Wave, and Harry Dent's The Great Boom Ahead. Halbooner books give you insight into where we have come from economical, and the other author give their view on where we are headed. Their contrasting viewpoints are important, allowing me to see what my eyes cannot. Something called the future. By reading books like these, I have been able to gain insight into the ups and downs of cycles and trends of the economy. I common A common theme in all of these books is that one of the biggest changes of all is right around the corner: how to play the bank. After the 1986 Tax Reform Act, there were opportunities where everywhere real estate stocks and business were available for low price. While it was devastating for people on the left side of the quadrant, it was wonderful for me because I could utilize my skill as a B and the I to take advantage of the opportunities around me instead of being greedy and chasing everything that looked like a good deal. I decided to focus on real estate. Why real estate? For these five simple reasons. Pricing. Number one is pricing. The price of real estate were so low that mortgage payments were far lower than the fair market rent for most property. These properties made great economic sense, which meant there was little risk. It was like going to a sale at a department store when everything was priced 50% off. Financing. The bank would give me a loan on real estate but not on the stock since I wanted to buy as much as I could while the market was depressed. I bought real estate so that what cash I had could be combined with financing through bank. For example, let's say I had $10,000 in saving to invest. If I bought stocks, I could buy $10,000 worth of stocks. I could have gone on margin. When you buy on margin, you put up only part of the total cost of the broker company lends you the remainder. But I was not financially strong enough to risk a downturn in the market. With $10,000 in real estate and 90% loan, I could buy a 100,000 property in both market went up 10%. I would make $1,000 in stock, but $10,000 in real estate. Taxes. If I made $1 million in profit from stock, I would have to pay nearly 30% capital gain tax on my profit. In real estate, however, the 1 million could be rolled tax free into the next real estate transaction. On top of that, I could depreciate the property for even greater tax advantage. Important note: an investment must make economic sense before the tax benefit for me to invest in it. Any tax benefit only makes the investment more attractive. Cash flow. Rents had not declined even though the real estate prices had declined. This put a lot of money into my pocket, paid for the mortgage, and more importantly, allow me to time the market rents bought me time to wait until real estate prices went up again. When they did, I was able to sell. Although I carried large debt, it never hurt me because the rent were far greater than the cost of carrying the loan. Number five, an opportunity to become a bank. Real estate allow me to become a bank, something I had always wanted to do since 1974. Be the bank, not a banker. In Rich Dad Poor Dad, I wrote about how the rich create money, often play the role of banker. The following is an simple example that almost anyone can follow. Let's say I found a house that is worth $100,000 and I get hack of a deal and only pay $80,000 for it, and 10,000 down payment plus 70,000 mortgage I am responsible for. I then advertise that the house is available for sale, thousand $100,000, which is its appraised price, and use these magic words in the ad: house for sale, owner desperate, no bank qualifying, low down payment, easy monthly payment. The phone rings like crazy. The house is sold on what is called a wrap or a lease purchase contract, depending on which country you are in. In simple terms, I sell the house for $100,000 I owe you. This is what the transaction look like. Assets, liabilities. On my balance sheet, assets $100,000 IOU, liabilities 70,000 mortgage. On the buyer balance, assets nothing, liabilities $100,000 IOU. This transaction is then registered with title and escrow office, which often handles the payment. If the person default on the $1,000, I simply foreclose and sell the property to the next person who wants a low down, easy monthly payment home to live in. People line up the opportunity to buy a home on these terms. The net effect is that I have created $30,000 in my asset column for which I am paid interest just like bank gets paid interest for loans in makes. I was beginning to be a bank and I love it. If you recall from the last chapter, Rich that said, be careful when you take on debt. If you take on debt personally, make sure it is small. If you take on large debt, make sure someone else is paying for it. In the language of the right side of the quadrant, laid off my risk or hand my risk on to the another buyer. This is the game. This is the game in the world of finance. This type of transaction is done all over the world, yet whenever I go, people come up to me and say those magic words, you can't do that here. What most small investors fail to realize is that many large commercial buildings are bought and sold exactly in the manner described above. Sometimes they go through a bank, but many times they do not.